Hey friends, welcome to Poverty Proof, how the rich think differently and how to train your brain for wealth. Today, let's take one of the chapters out of the book Poverty Proof and talk about one of the greatest threats to your long-term earning.
What is your reaction to the following phrase? The greatest threat to your wealth is tax. Say this phrase out loud and most people's reaction is to laugh, usually nervously. So why do they laugh? To them, tax seems like an inevitability, written in stone. Why would you even bring it up when there's nothing you can do about it? They perceive hints of dishonesty in this statement, as though it is implying that they should try to evade taxes. And yet, tax is the greatest threat to your wealth, by far. And while you shouldn't try to evade taxes, that is criminal, you definitely should try to reduce them. That is financially smart. For most people, no other single force takes such a big chunk out of your income. In South Africa, the average person pays between 18 and 45% of their earnings in tax. And then they also pay tax every time they make a purchase with the money left over. And then they pay capital gains tax every time they come into a large chunk of money. It is not difficult for the average person to give more than half of what they earn in their lifetime to the government in the form of taxes. More than half of your wealth. And most people never even think about it. Yet the size of the chunks you will give in taxes are certainly not inevitable. They are actually negotiable. Depending upon how you set up your life, how you go about deals, and how you use your money, you will be taxed either more or less. People who are not aware of this do not take clever steps to set up their lives more tax efficiently, and therefore end up paying the maximum tax possible for their scenario. That's the same thing as giving away your money for no good reason. Those with financial education do the opposite. Typically, wealthy people pay very little tax. Some actually pay zero in personal tax, and that is perfectly legal, though their companies might pay a lot. Middle-class people typically pay the highest amounts possible, and again, it's simply because they do not know better. Learning to change this one thing in your life can change how wealthy you become. If you kept as much as an extra half of your total income, that would make you twice as rich. Does that make sense? It is irresponsible not to learn how to do this. There are many things you can do to change how much tax you pay. I will explain just some of them here. But the more important principle is simply to understand this. High taxation is not inevitable for you. It is in your hands to a larger degree than you might realize. And all through your life, you must remember this idea and make smart moves accordingly. The moves will change and evolve over time. The principle must remain. Always be smart about tax. If you work for yourself, you have a great many opportunities to restructure your life so that you minimize the amount of tax you will pay. Some clever business owners and investors pay zero in tax, and they do so legally. Why is this the case? Well, because every nation's government has patterns of behavior it wants to encourage among its people. If you follow these patterns of behavior, which might include saving or investing, or starting certain types of businesses that are desirable to a government, or building houses or properties, you could enjoy very large tax breaks or tax reductions. This is not stealing. The government wants you to engage in these behaviors and is actively incentivizing you to do so. When people speak bitterly of the rich not paying taxes, they are ignorant of this point. When the rich don't pay taxes, it is because they are doing things that are so good for the country that the government is rewarding them. The government wants them to do this. These people are a positive force, not a negative one. They are being clever, and they are a force for societal good. So, let's explore some actions. If you own your own business, you can claim a great many of your expenses as work-related, which reduces the amount of your income that is taxable. Salaried workers can enjoy tax breaks too. If you work for a salary, paying money into a retirement annuity will reduce the amount of your money that is taxed each month. In certain cases, if you increase the amount that you pay into your retirement annuity, you could actually push yourself down into a lower tax bracket and thereby end up keeping more of your own money each month. If you can, why wouldn't you? Overall, there is no doubt that entrepreneurs can fare better than salaried employees in the tax reduction stakes. That is yet another reason I would encourage you to seriously consider becoming your own boss. Consider this: an employee who earns 1 million rand per year will likely pay about 40% in tax. That means that, although they have earned 1 million rand, they will get to keep only 600,000 rand. However, an entrepreneur who earns 1 million rand and cleverly structures their life for tax efficiency may pay closer to 15% in tax. This means they will keep as much as 850,000 rand of their income. Both people earned the same amount of money. But the tax-savvy entrepreneur ends up with an extra 250,000 rand in his pocket. The highly tax-burdened employee gets only 2/3 of what the entrepreneur gets, even though they have earned the same amount. Do you see how great an impact tax has upon your wealth? Now imagine this at a higher level. Imagine an investor or entrepreneur who is earning 10 million rand in his or her personal capacity each year and paying 0 in tax because she has done clever things, such as using profits from her business to buy more businesses. This entrepreneur has spoken to her tax consultant, and they have worked out ways to structure her life and business so that she runs an empire, earns 10 million rand per year, and keeps all of it legally. If she didn't speak to her tax consultant, she might have ended up losing half of it to taxes and keeping 5 million rand instead of 10 million rand. Her conversation with the tax consultant has been worth 5 million rand to her. That is the difference a little knowledge can make. That is why we should continually educate ourselves. Now, while it is true that if you work for a salary, you have less room to maneuver, there are nevertheless still many things you can do to reduce your tax burden legally, and not to do so is the same as giving away money. If you keep that money, instead of losing it, you could get richer. If you invest that money, you could double its effectiveness. The specific things that you can do to reduce your tax payments will change over time and according to your changing scenario. But the principle always remains: find out. Learn what you can do to be tax efficient, and you will get to keep more money. Sometimes a lot more money. Now let's go one step beyond taxation on your earnings. It turns out that almost every big move you make has tax implications. You should always find out about them before you make dramatic changes. I recently heard a story about a woman who sold a house. She paid a large amount of capital gains tax on it. She made the sale without first speaking to a tax consultant. Had she just spoken to a consultant, they would have told her that, had she just waited 6 more months, she would have paid 0 in tax. That's all she had to do, just wait. But she didn't know that. The difference was hundreds of thousands of rands. Don't do anything without first finding out the tax implications. Starting a business? Talk to a tax consultant. Getting married? Selling a house? Doing a deal? Writing a will? Inheriting an estate? Talk to a tax consultant. That conversation can make you richer. New behavior. I will keep every receipt. Always, forever and ever, amen. Even as a salaried employee, some of the amounts on your receipts can be deducted from your taxable income. If you travel for business in your own car and you do not keep the petrol receipt, you are giving away free money. That is the opposite of wealth-generating behavior. That is impoverishing behavior. As an entrepreneur, those receipts are even more important. Your tax consultant can work out which ones to submit, but keep them all. The more the better. The fewer receipts you keep, the more money you lose in unnecessary taxation. Think of every receipt you keep as a form of wealth building. New behavior. Before every big move I make, I will talk to a tax consultant. I'm not going to give away hundreds of thousands of rands through simple ignorance. Instead, I'll ask how I can make this move more tax efficient. That conversation will make me richer.